think we're going to get started here. So
That's
once
terrific.
again, Once again, John Harris, Coral Gables Trust, and I'm again very pleased to have everyone join us for this very timely topic. We have some great guest speakers today, and we'll be, the topic is the reopening and the financial impact and what we can expect, and particularly the impact here in our local community. I want to thank Gail Scott, co-publisher of Coral Gables Magazine, for coming up with this concept with Coral Gables Trust, and I want to congratulate the magazine on their second anniversary. And now I'd like to introduce our moderator today, and we're extremely pleased to have Rich Rothman, who's also co-publisher at Coral Gables Magazine and a 30-year plus publisher here in our local community, and also the co-host of a nationally syndicated radio talk show, Made in America, and again, very, very well-known personality here locally. So very pleased to have Rich. So Rich, I'll hand it over to you, and look forward to your moderating this panel. Thank you.
Thanks an awful lot, John. I really appreciate it. And thank you for everybody who's joining us today to partake in our second conversation that we're having along with Coral Gables Trust. Delighted to work with such a great organization, and delighted to have everybody with us. We have a really good panel for you today. Of course, you just heard from John Harris, which is great to have here. We have Jim Davidson, who is the chairman and CEO of Coral Gables Trust. Nino Pernetti is with us today, which is just wonderful, because everyone knows Nino Pernetti, that's for sure. And not only that, you may get the opportunity to get a really good reservation from Nino before this event's over. So this is very important for you. And Mason Williams, whom we all know from our previous discussions. Mason is the Chief Investment Officer with Coral Gables Trust. These are wonderful people and just the type of person that Coral Gables wants to work with. We're going to talk about a very important topic today. And we broached on this a few weeks ago, that probably the most significant segment of the economy in the United States is the small to medium-sized company. But if you really break that out, the small company, according to the SBA and others in the government, goes up to 500 employees. So it really is a large, small group of people. But if you think about it, the biggest economic generator in the country, and the biggest job creator in the country, happens to be the small business market. It is by far the most significant market, and it is the one that really drives us. It's the one that gives everybody the opportunity to have a portion, they're part of the American dream. I mean, that's what we learned growing up. People came here to this country. We're a country of immigrants. My family all came from another country, long time ago. And I'm sure all of you connect the dots and can find our way back to another country. Certainly we're nomadic. We move from one part of the country to another part of the country. And we do that because we're very, we don't avoid risk. Americans don't avoid risk. We're willing to step out and make something happen. We're the can-do people. Sort of like why John Kennedy said, we're going to go to the moon, not because it's hard, because it's difficult. Because by saying that in that one sentence, he kind of defined everything about America, the greatness of America. So when I get an opportunity to talk about small business, I just get excited, and I want to get up and run around and just wave the flag, because I feel so good about it, as I know you all do too. So when we watch what was happening over the last 60, depending on where you are in the country, 60, 90 days, some parts of the country aren't even opened up completely, or some partially, but not completely. We wonder, well, how is this going to work? How are we going to open up? So the basis of the conversation today will be exactly that. What's it like to open up this country? We can't just flick a switch. That's not going to work. So we're going to discuss, what does it mean to open the country? What are the unintended consequences? What does it mean to the stock market? What does it mean to dealing with cash flows? What does it mean to even open up that door and invite people in? And that's something that Nino is really good about, all the above, by the way. So we're going to have real time, and we're going to have academic time, and we're going to take it right to Main Street. Can't get any more than that. So Mason, I'm going to start with you for a second. One of the things we all watch, I do on Made in America, and I know you do at the organization at Gables Trust, we look at the unemployment numbers. Now we know that prior to this disaster with this COVID, this virus, we had amazing unemployment numbers, the best across the board, absolutely spectacular. Whether you're in a minority or whether you're a female, the numbers were just off the charts, the best we ever had since we kept these numbers going. Now, that all ended with the COVID, and we wound up with about 40 million Americans unemployed. Wow, that is a stab you in the heart, scary thought. But now we're watching, we're still looking. You know, Mason, we look and we saw over the last few weeks, 18 million unemployment, 17 million unemployment, 20 million unemployment, 26 million, over 30, 36. Oh my God, we're shuddering. It's 40. And then today we find out, the numbers came out at 8:30 this morning, so it's very relevant for our conversation. We find out we're under 2 million unemployed for last week. We're like, let's just say 1.8.
Yeah, that's right.
Just about there. What's your take on that? How do you feel about that?
Well, it's not, I mean, it's painful. I mean, there's no doubt. I mean, like you said, Rich, before this got going, we were at record employment, down below 4% and getting stronger. There were a couple issues at bay in the background that were feeding the economy. Animal spirits were high. And then literally that all went away in 6 to 8 weeks when this COVID thing really picked up. So, today, but what's important, I think, whatever is being reported now is in the rearview mirror. The markets have tried to price that in, whatever it is, ahead of time. And when it comes out, it's out. So markets are a forward-looking mechanism. They tend to look forward to what's happening and what they expect to happen based on what the analysis says. So it is painful. But what's happening now is the trends is what's important. The trends of the data have somewhat peaked, okay? It's maybe a little bit too short-term to call that for sure, but at least the trend is going in the other direction, okay? And that's been enough to make the markets react in a positive manner over the last 6 to 10 weeks, okay? So as we reopen, the expectations for those numbers get a little bit better, but slowly, okay? And it's gonna be scattered. There's gonna be sectors that are gonna come back quicker, and there's gonna be sectors that are gonna be dead last, particularly, leisure, hospitality, and things of that nature. So we're right in the heat of it right now. April, May, and June, we're gonna be the defining months of all of this. Okay, where the kitchen sink was going to be thrown at this thing. So now looking for July, August, and September, the summer is going to be over with, and then we're going to go into the fall. And again, the trend is going to be really predicated upon, will a second wave of this COVID thing happen? Okay, so there's a lot to come in the weeks ahead. So,
okay, so it's very, very interesting that there's another way to look at the numbers, Mason, and maybe, Jim would like to jump on this too. And I want to get to Nino on this because he has a lot of employees. The number of people that were on unemployment just a few weeks ago, which was approximating, 35,000 or more, almost 40,000. Last week, we're down to 25,000 in active claims last week. So even though the numbers went up with new claims, the older claims were kind of reducing. What do you think, Jim, what do you think that means if we're getting fewer people staying on the rolls, even though we're increasing by 1.7, 1.8, 1.9? What do you think?
Well, I think it's people that are going back to work, and but we're not getting the people going back to work that we would like to see because so many of the businesses now, I have a nephew out in Missouri that runs a meatpacking plant. They have about 300 employees, so they're able to get back to work, but the workers don't want to come because they're making so much on the unemployment. So I think that's a real problem that we've got to get past.
Yeah, that was one of the unintended consequences, and that was discussed on the floor of the House. It was discussed in the Senate. This is a little reactionary because it could work against moving forward the way we want to go. Nino, I want to get to you for a second right now. Nino, you're Main Street. You don't get any more Main Street than Nino Pernetti. I mean, you're on that street. You're mainline Coral Gables. When you look at the scenario as an employer of so many people, what's your take on that?
Yes. Good morning. You brought up two very good points. Now, let's take the unemployment money they received, and I'm a victim of that. Because many of my employees, they applied for unemployment. And when they receive $850 a week or more, they don't want to come because many of them, they don't make that money. And even if they made a little bit more, but they make their money. So there is a controversy, a huge one, which has not been properly planned, in my opinion. And also the $1,200 they receive on top of that. So that it created a vacuum for us. So now that we reopen, yes, as you said, your nephew Jim up there in Missouri, yes, we did reopen, but people are hesitant. Remember that we are in a foreign territory now. People don't come out to my business, other business, whether it be a barber shop, a manicure, massage, restaurant, they don't go out right away. So yes, we got the employees back, but on a reduced time too. So, and what is the feedback? Most of them, they said already, I was making more money as an unemployed, because if I used to serve 150 dinners average weekdays and night, now I have 20. So I don't keep all the cooks and the dishwashers and the waiters until closing time. So I send them home. And as we all know, everybody are paid hourly. They make considerable less money than unemployment. So this is an issue that we have been, it's been happen all of a sudden than never before in our lifetime. So we are in shambles. So this has to be addressed or readdressed in the future. But the people that they come by, no, not yet. They're still staying home.
Okay, so who said that? Did someone just pop up on that? Okay, so what we're really saying is that you're ready to go. Your friends on Miracle Mile, your friends on Ponce, all over the Coral Gables market are ready to go, but there seems to be a trepidation. Is that the word we might use?
Huge trepidation.
Yeah,
Yes.
yeah.
Yes.
So somehow we're in an alternate universe right now. We're in an alternate universe that we have to understand, define, take apart, and analyze how to reopen, which is the point of our conversation. So, Nino, you can't get any more intimate than going to an excellent restaurant, because the most intimate thing you can do is feed somebody, basically. I mean, if you think about it, that's very personal. What do you see going forward? How do you overcome that? What's your
Yes, you're right, Rich. Remember that the number one comfort of a human being is having a good meal, hot meal, comfortable. So people, the urge to go out, but using the words you said, the trepidation is huge. Remember, guys, we are not out of the cage yet. So there is a lot of trepidations. Plus, though a restaurant with this distancing one, we alternate the tables, the restaurant looks half full or half empty, and there is not the same mood. So it takes time. The wheels start to spin. It takes time. But people coming up very hesitant, they look around, they eat quick, and they leave. But fortunately, we have the takeout service. This is a huge business still to do it. So, of course, who makes money on this takeout business if we have all this delivery, and I named the Uber Eats and Postmate, because they take up to 30, 33%.
Yeah, and most people, Nino, no one really knows that. You don't know that when you're ordering. I found that out because we ordered out, and I got a very nice email from the restaurant directly, because I'm listed there somehow. And they thanked me so much for ordering directly from the restaurant, because they were going to give up a big commission to the folks that were delivering from that restaurant in that part of town. And I don't think people really understand that. So we're really living in a different environment. And so that's the new norm. That's the new norm. So, Jim, when you think about this and you define this new norm environment that we're in, how do you suppose non-restaurants, that's a whole different ballgame. We're going to get back to that. But how do you suppose it works in other brick and mortar environments what does it look like, Jim?
Well, every business is different, and we have to think of it in that way. So Nino has his problems with a restaurant, but we just were visited by a nephew in Alabama that has a towel installation business. And for over a month, 6 weeks, no one would let them come into their home to do their work. So his people were on unemployment. People weren't getting their work done, but now people are getting more at ease, and so it's picking up. So I think the business that's going to happen depends on each individual type business, the interaction they have with customers, whether it's a service business, whether it's a retail business, whatever it is like that. So I think the big thing here, and I think we'll get into it later, the big change is that people have been scared to death. In early March, WHO came out with the forecast that there were going to be 2 million deaths because of COVID. Well, Stanford has done research now based on the actual data, and so far we've had, I think, 105,000 deaths. But the incidence of people dying from this is less than 0.2%, whereas before the data coming out of WHO and other organizations was much higher. So I think we want to get into this a little bit later, the unintended consequences of this. But I think that once people are getting over this initial fear, we're all going to die and it's the most horrible thing in the world, the death rates aren't as bad as influenza. It spreads much easier. It's easily spread, but a lot of half the people that get it are asymptomatic, and no one has died yet under the age of 18, basically. And 80% of the deaths are in the 65-year-old and older people with health conditions. So that's it. So the public's got to come to grips with that and get over the initial fear that drove the lockdowns, which have got to loosen up. And I think we're seeing evidence that politicians and others are getting more educated about it, and it is loosening up.
So I want to go back to Mason, and then I want to switch back to Nino. Mason, I tend to think if you look at the stock market, and you're great at that, if you look at the market and you see where the market's going, or you look at the individual verticals in the market and some of the companies like hotels, cruise lines, airlines, you just mentioned before that American is ramping up. So is Southwest. They're adding flights, by the way. So is TSA. TSA said the other day they've reached a high on Monday of like 2 million passengers passing through in one day. It was a remarkable number for them. And that's a direct correlation. So when you see hotels are getting more bookings, you see that Disney, Universal, and SeaWorld are now announcing they're opening up in July. You see that airlines are getting more optimistic. I mean, think about it. If the airlines were flatlining, if we all listened to Berkshire Hathaway, and I don't mean Ronnie, I mean out in the Midwest, then maybe we'd stay away from airlines. But all of a sudden, sort of like if you took advantage of the airlines in the market a few weeks ago, wow, what a great opportunity. But now they're starting to ramp up. Mason, do you think that that's a potency of things to come? Do you think that relates to, getting back to Nino, a comfort factor? I mean, I got to tell you, if I'm sitting on a cruise line, I'm in my cabin or my suite or whatever it is, and I'm hermetically sealed with 5,000 people, which my wife would never do, by the way. So this is all hypothetical. Then, seriously, she's just wrong gal. But do you think that tells us that we're starting to, do you think that's going to loosen up over the next few weeks? Do you feel good about that or not?
No, it does. I mean, getting back to where we were pre-pandemic, I don't think it's going to happen overnight. It's going to be a long time, but at least we're trending the other direction. And like I said before, that's good enough for participants in the market. So airlines, if you look at the market in general, what's been going on lately, look at other sectors too. Gold's taken a dip, the dollar's weakened, okay? All these safety areas have sort of gone the other way, which is another sign that things are overall starting to heal, okay? But cruise lines, hotels, airlines, yes, the activity, now remember, we're coming off of bottoms that were just super, super depressed. So a lot of this could be a reflex trade too. And it's probably a little bit too short of a window to really define a trend for certain, but it is reassuring. The bulk of this rebound in the markets have come from really large cap tech, the stay-at-home stocks, like Netflix, Zoom, Wayfair, Home Depot.
Cocooning stocks. Everything you cocoon at home is doing great.
The stay-at-home trade, with the riots in the last couple of weeks, you can see kind of that trade coming back a little bit because people think, oh no, this is going to set us back a little bit. But you can really kind of watch the market from two lenses: stay-at-home and recovery. Okay, and use those as your indicators for what's going on. And you're starting to see some flipping the other way, which is very encouraging.
Okay, so Nino, if we're looking out and your friends from American are telling you that they're ramping up, and I've been getting promotions from them from my business account from American, all these great deals going around, which is great. And I'm very excited for them because I think American's a great supporter of this community. In this new normal, Nino, how are you kind of cogitating? How are you adapting to it? What do you think you're going to do to inveigle people to come? And they're your buddies too.
It's a good question, Richard. First of all, let's not forget, and what Mason was saying also is correct. First of all, people must acquire confidence. There is no confidence yet. People are very trepidant to go out. We are not out yet. So eventually, yes, it will take off. The market will pick up. The restaurants will pick up. Everything, it has to. It must to. We have to. But people, they don't have confidence. And I look at the people here. I look all my customers, 95% of my regulars. I look them in their face and I see them, and you too, kind of lost, kind of looking around. Like they, you know, that discovery now in the Pacific Island, and they look around. So we need, all of us, acquire confidence. That's all that's matter. And then the rest comes by itself. We come through kind of a tsunami. Never happened in our lifetime, as I said before. We don't know how to treat it. Washington, Tallahassee, we here in Coral Gables, we don't know how to deal yet. Everybody. So we kind of improvise certain things. We are rushful in decisions, and it's normal. We are human. But as when we will have confidence that the country, the situation is under control, everything will go on a normal path.
You know, Jim, I want to get back to you on this, and maybe Nate Mason can jump on it. It's sort of like there are interesting amalgamations occurring. You know, I'm sitting back and I'm watching. For one thing, going back to Nino, it's that a Cheesecake Factory announced the other day that their revenues, and this is a real hybrid, yin and yang. Cheesecake Factory says our revenues are at 75% of what they were before, but everything, you know, screwed up and we're nuts. On the other hand, we're closing 100 stores or something like that around the country, whatever they've got. Some big number is going to be closing down. That's a yin to the yang. But on the other hand, Jim, and here's where I'm intrigued. So you see these amalgamations occurring. NBA wants to open up and have a season. They want to open up and have a season. They're talking to the mouse. They're talking to Disney. They're saying, wait a minute, let me think. Disney World is 3 times the size of Manhattan, which many of us didn't realize that, except when you have children and you walk it, you know you walk the whole Manhattan, and I paid my dues there. But they want to deal with Disney. They want to bring their season to Disney World. There are 3 arenas on the property, and property is an understatement when you're 3 times the size of Manhattan, that they want to bring it there and have it there because they can control it. That's what they're talking about right now. It was all discussion yesterday. All exciting that this is going to happen. Wow, that's wonderful. So it looks like different things are happening and different relationships are occurring. How do you feel about that? Do you think that's part of the new normal, Jim?
Well, I do, and it comes close to home to me. I have to admit, being here in Miami, I'm actually an Alabama Crimson Tide fan. So I've got season tickets, and I'm looking ahead. Am I going to be able to use those tickets in the fall? And they're talking about, you know, selling. We have 100,000 seats at Bryant-Denny Stadium, only letting 20,000 people come in. So how's that going to work? What are the Dolphins going to do about it? But I'm giving a prediction. As I mentioned, the Stanford research says we've got to stop the lockdown. The young people have to get out and mingle and create the herd immunity where you know, they're not going to get the disease again. But then people that are older and have health conditions need to stay sheltered until this all opens up. But my prediction is, as we go through and more politicians and more people learn about the Stanford research and others too, the CDC has endorsed that research from Stanford and other schools and other institutions. And for example, in Italy, they found now the potency of COVID has declined dramatically. So I think as the public and mainly the politicians and companies get more educated on this, things are really going to open up, and we all may be sitting together at a Dolphin game or a Hurricane game this season together.
Well, that'd be good. And then we can sell the FSU tickets because you get a lot of money for those.
There you go.
My son went there years ago and made a lot of money. Nino, when you're out and about, and I know you know everyone in Coral Gables, when you're talking to your friends, your colleagues, your peers in the community, and they're the owners of the stores and whatever, and what do you hear from them? I mean, when they're probably saying the same thing you are to agree, but are they coming forth with any bits of excitement that you want to share, or can you not share? I don't know. Maybe you should share it and just violate it.
Well, there is nothing to share in a sense because we are all in the same boat. There is a sense of depression. There is a sense that everybody says the same thing. The consumer is not around. People don't come around. All the shops, I know many shops, and I browse around in Coral Way. Most of them, they've been closed since last week. And they open, there is only ghosts around. So the engine of the business is the people spending money here, there, and there. So we don't know, it's coming out, but we are not out. We don't know what to say yet. Yeah, it's true in Italy, and I read that this morning too, and I spoke with my family there, considerably down. They just opened all the frontiers, the airlines, because it's on. But here in America, we are still inside the cage a little bit. So people don't come around. I see them here. They come around, as I said before, we need confidence. We need to erase these things. And then people start to go on their knee, go to the barbershop, put money in the stock market, et cetera, et cetera. All Disney's, yes, I read that too this morning. Disney's going to open with all these rules and regulations. But still, people, they're very trepidant to go out, as you said before. So it needs time. 2-3 weeks, maybe, I guess so, in my estimation. Early July, that's when things start. That's my feeling, my pulse I have here with the people coming around.
Yeah, I think you're right on that. And by the way, for those of you who have questions, and I know you do, you might want to get hold of the chat area on the site and log in your questions now so we can get to them in a few minutes when we get to that segment. So, all right, so let's continue for a second on this. I think it's interesting. We're looking at the market that has changed so radically, and we're looking for an opening. One of the reasons I had a meeting with some folks from the port the other day and the health side of our community with the port is that a protocol will have to be developed in this new environment, the new, to open up the cruise lines. As Jim pointed out before, I'm not so sure I'm going to get on a cruise line. Well, maybe we won't. But right now, we got to well, first of all, you can't right now. Why? Because the protocol to track people is not connected yet. It's there. It's floating out there. There's a mega company that has that. They're already working with 97% of the cruise lines. It's ready to go. It's being facilitated now. But going forward, and that what happened till August, July, August. So I think Nino's right. July is really going to be the renaissance, so to speak, which, by the way, is going to be the theme of my magazine and coming up for July. Sort of like everyone go think of the top of the Sistine Chapel in Michelangelo's painting. So, so if that's happening, I think it's going to take a little bit of time to get people more comfortable. I thought it was Jim or Mason made a comment in the beginning of our conversation that with all that's happening, and good Lord, there's a lot happening, and that requires, many more hours of conversation beyond the COVID and what's happening in the United States right now on Main Street, which is very scary. It's kind of taking the eye off of the safe security factor to a degree. It just, because we're not talking about it. I don't find, I watch news all the time, 24/7 practically, but it may give whether it's a false sense of security or not, but we're not being pummeled every hour on the hour. Remember, I thought this was the Vietnam War again, where they were showing on CBS News the number of deaths. When I was at Syracuse University, that's what they did. Every day on the news at 6 o'clock, we saw how many people died that day. They did that in the Iraqi war. They were doing that with the COVID thing, but you don't see that right now. It's not 100% there all the time. So maybe the eye's being taken off, and maybe there'll be a sense of security, Nino, going forward that, my God, if we can get 10,000 people on the streets, then how can we say we can't open our shops? You know what I mean? So it kind of behooves us to take a look at that. I want to throw this out for a second because we're going to need some time for this, and I want to do it. Every time we do something, there's an unattended reaction to it. You just don't, I don't care how smart, maybe put that in quotation marks, they are up in Washington. When you create a bill, there are unattended consequences. Obamacare had unattended consequences. It may have meant well, but there were things that occurred with, you know, millions of people losing policies and all sorts of stuff went on. Premiums went up, deductibles went up. It wasn't supposed to work that way. Unintended consequence. The unintended consequence of this with a prolonged shutdown, which may behoove us to open up as quickly as possible, which Jay Powell wants to see at the feds, you know, that seems to be, you know, the mantra. And so, Jim, when you look at some of these unintended consequences, and we're all thinking about health, what comes to mind?
Well, what comes to mind is, as I spoke earlier about the Stanford research, which has now been accepted by CDC and other health organizations, the death rate is just about infinitesimal. And so the herd immunity needs to develop. People get the disease, 50% are asymptomatic, very few have to go into a hospital. So get the younger people out in the working again, going out to restaurants, coming to Cafe Abrace, get it going. And then the sooner it will all end and go away and be a bad dream. But to do that, we've got to have the herd immunity. But the unintended consequences, as pointed out by Stanford and other organizations, is the healthcare crisis it's created. The lockdown has resulted in a huge number of deaths. For example, we all know surgeries have stopped unless they're totally essential. Treatment and diagnoses of cancer, tumor biopsies, brain aneurysms are not being conducted. So approximately 150,000 new cancer cases a month arise, but they're not being diagnosed. 650,000 people are undergoing chemo treatment now. Half of them are not getting that treatment anymore. Stroke evaluations are down 40%. Transplants are down. Depression, drug use, suicides created by the crisis from job loss and financial insecurity are up 50%. The deaths have resulted for this. We have yet to learn the extent of it. Baptist South here, because a patient can only be admitted for something that's essential and you can't have family go with you, and you have to have a COVID test before you go in, et cetera, et cetera. But the doctors have been sitting on their hands now generally for about 6 weeks. Baptist South, I've heard during this COVID thing, the losses have been over $500 million. $500 million for Health South, for Baptist South right here in our community. So what do we do about it? We get the young people out. I say young people, people under 65, but the 65 and older and those with health conditions, stay sheltered until you feel comfortable in an environment to come out. Schools have to reopen. The kids I've read that have been taking online courses, they're not learning anything. Half of them don't even take the test or show up. So we need to get the kids back in school. 0 to 18, just about 0 deaths in that. And they hardly even, when a kid has this, they hardly even know they had it. It's symptomatic. So get the kids back to school, which has the other consequence of then the parents can go back to work because they don't have to, have childcare, take care of the kids. So get the kids back to school in the fall, for goodness sakes, and let the kids, they're missing social interaction with their friends in addition to missing out on getting the education going.
And that's part of going to school. That's the importance of going to school, whether it's going to be, pre-K to 12th grade and then in college. Part of that experience is that experience of socialization and learning how to get along and knowing how to act in certain situations. And so that's out the window. Mason, let me ask you a question. And it baffles a lot of people. We're talking about, Nino was explaining that it's going to take a while, a little bit, to get people comfortable to come back and do their thing. And yet we're watching the stock market. Goldman Sachs the other day said, they see S&P 3,200.
Yeah.
Why is it? It's almost oxymoron. You know, things are locked down, but they're opening up. They're slow. Nino's explaining that people are a little concerned. We'll deal with that. We're going to make it happen. Yet the market, you know, we're only about what, 8.43% off the all-time high, you know,
Right.
prior to what happened.
Right.
So, and it fell 34%. Why is that?
Well, remember, we got a couple things at play here that are very important that you can't underestimate, okay? And that's stimulus. The Fed and the government did everything in their power right away to throw the kitchen sink at this thing. I mean, we had, the CARES Act passed within a matter of weeks. That was 2.2 trillion in size. And then the Fed in the background was doing all kinds of facilities and liquidity exercises to keep the credit flowing, which added up to multi-hundreds of millions, probably in the trillions. And by the way, there's more to come because the unemployment insurance benefit stops in July. They're kicking around ideas to extend that possibly, or come up with some other things to get people back to work to kind of wean them off of that benefit, which is very important, which is again an unintended consequence. But the market, remember, doesn't care what happened yesterday. It doesn't care what happened 3 weeks ago. It cares about what happens in 6 to 12 months, and that's what it's trying to figure out. I mean, with all this news flow and headlines, we can't forget we have an election in 5 months or so. So
It's going to get priced in come the fall.
right. So the market can become unhinged. It's done this before. It doesn't make any sense. Okay. I think the media did a lot of. There was a lot of damage done by some people that, were saying that this is it. It's going to go down 6, 7, 8,000 points further. And Main Street listened to that. They sell, they get out, they go to cash. And then lo and behold, the stimulus takes effect. And that's what's been carrying us. I mean, I'm looking at the market right now. We started down 120 points for the day. Now we're up 60. So this stimulus is a very powerful thing. If you remember coming out of the crisis, the Fed went to zero rates in 09 and 2010. And they didn't raise rates till 2015. There was a 5-year window there where we were at zero rates. And we weren't near as bad back then as we are now. So imagine how long this stimulus is going to stay in place going forward with more to come, by the way. And the Fed just doesn't pull this stuff back, okay? They do it very methodically, very carefully, and very slowly. So I think that's what the market, you can't underestimate stimulus. When you see a 10-year treasury at 0.7, your money market accounts in your local bank paying 0.05, and your 1-year CD in your neighborhood community bank paying less than 50 basis points, it gets people restless and it makes people start to take some risk, okay? And there's a whole other set of unintended consequences with that, but at least that's what's happening right now.
A real quick question. Are you finding people looking for alternative investments?
Well,
I throw that out because A, I'm an entrepreneur and
Yeah.
I deal with angel investors all the time. And
Yeah.
so are you seeing, is that a rich market, a dry market? Do you think people are looking for, if they can't make it here, they're making it somewhere else?
yeah, and Jim can chime in here on this as well. But I think, as an investor that's prudent, that wants a well-diversified portfolio, the alternative bucket is never going to go away. The hedge fund world is supposed to stay more steady during times like this. And the jury's out on that, by the way. It's really inconclusive. Some areas have done well, some areas have not. Depending on the bets that they're making. But real estate in South Florida, if you figure that as an alternative asset class, I'm having a heck of a time trying to find a house. And I think the sellers pulled the plug in March because they didn't want people trampling through their home, which means supply got really tight and prices have held their ground. And I don't think that's just a Miami problem. I think that's happened in a lot of pockets around the country where there's a major supply shortage. So if you're a real estate investor, I think you've made out okay. But I'll kind of hand the baton to Jim if he wants to chime in on that as well.
Yeah, Jim, you give us a thought.
A number of years ago, just before we started Coral Gables Trust Company, I was a co-founder of SBA Mezzanine Fund. And so I know that market reasonably well. And that market, of course, is dominated by the huge state pension funds and others like that. So the high net worth individuals participate in it, but they're really a small factor in that market. But we look back over the last 10 years, and the public markets have performed better than the hedge funds, much better than the hedge funds. And so a lot of people have been turned off against them. The big state pension funds still do it to have a diversified portfolio. But we found that investors are much less interested now in the alternatives than they are in having the liquidity of being in the stock market and the performance over the public markets over the last 10 years. So I think now fundraising is continuing, and these alternatives, especially looking at distressed situations, real estate and bonds, fixed income. But for the average investor and for the even high net worth individuals, I think given the things that have been happening, we've talked about, people are going to value the liquidity of being able to get out tomorrow rather than having to wait another 7 years to get out.
Well, you know, what's interesting, I want to get to Nino. What's interesting is that in April, there was an uptick in mortgage applications. You know, we may not be selling as many properties, but there is an uptick in mortgage applications. So it's going to be very interesting to see where the real estate market goes. Nino, as people are playing in the market and they see that their portfolios are recovering, you know, which is a great reason why I'm sure Mason, everyone, and Jim say, listen, do not panic. You know, don't put blinders on. Take a deep breath. In the long run, you're going to be okay. You know, don't worry. In the long run, you're going to be okay. Nino, and as people see that things are turning, is there a correct correlation to the number of diners are going to come in and enjoy your meals?
Let me go back first what Mason
Sure.
and Jim just said now. I mean, I'm one of the victims too on the market. You said don't panic, but you worry a lot.
Yeah.
Yes, we come back, but we worry a lot, and you had sleepless nights because what can you do? The market keep going down, and you don't know when. When yes, we come back as we had in 2008, yes, but you worry a lot. So they are on the same boat, the same as themselves too. So the correlation is the same. Different ingredients, but it's the same soup. People don't want to go out. They don't want to spend. And I have to repeat again, there is not confidence yet. So remember, we are expert in our field. We are expert on what we do. And we understand, we read the newspaper, we listen to the news, CNN, Fox, etc., etc. But most of the people, the citizens, they don't. They are not aware of the situation as much as we know. So they're scared to that. Even people living in the neighborhood here, let's go Gables Estate or Pinecrest, etc. I see them. They come here, as I said before, looking around, you know, like they just woke up. What is going to happen next? Attitude is this. What is going to happen next and when? My estimation, as I said before, we will start the first week of July. Everything comes to that. I don't believe that the cruise and Disney will be patronized as they hope so, and I hope so too. But people, I have the pulse. The restaurant is the number one that people goes out and spend money because it's a little money. They don't go to shopping. They don't go much, but in the restaurant, that's the first comfort they have. So there is this no confidence yet.
You know what's interesting in the local economy, and don't forget to get your chats in on the chat line because we're going to switch over to that in just a minute. But if you notice the advertising, well, first of all, everyone should be celebrating. The keys are opening, and you're going to get down there. And I'm sure you're getting the same ads that I'm getting from the Casa Moradas and the other properties down there to come on down, which is great. And you're seeing that on Miami Beach with, you know, Billy Talbert's doing that and promoting people there. And we've got the Palm Beachers are advertising very heavily because the word right now is staycation. Something, by the way, we're covering in my next issue. And so, Nino, maybe you're right. Maybe if people aren't going to get on, maybe they will, maybe they won't get on the plane and go to Italy this summer. I'm not sure that's going to happen. I'm not sure they're going to go up to Western Canada, to Alberta, and appreciate Banff or, Jasper or something like that, which is where my wife likes to go. But they're going to be local, and they're going to get in their car and they're going to drive around. So they're going to stay here. Maybe, Nino, that behooves the good fact that your July might be the big uptick for you. Maybe because they're here. They're not disappearing.
Absolutely.
Although they may be in cashiers up in North Carolina, I will say that.
You're absolutely right. Because I myself, I take off 1 month every year. I go to my hometown in Italy, 1 month. I'm not going. I stay here. So is a very, very good point. What you said, people will stay here. They won't travel much, even down to the Keys. The hotel are still closed, or North or South Carolina. They'll stay here. So probably, and I'm expecting and foreseeing and projecting, well, I will have the best July, August, and September ever in my 31 years in business here. Absolutely. They stay here and they will spend money here. They stay here.
That's a good comment. That's the strongest comment we heard yet, coming from Nino. That's wonderful. I'm glad to hear that. Mason and Jim, I'm going to get to a little bit of a wrap up towards the end. You feel optimistic? I gather you feel optimistic. We're all feeling a lot better than we did a number of weeks ago. Mason, you first.
I do. I mean, I am naturally. I mean, look, there's a couple of things also kind of hit on Nino's pin-up demand scenario, that's important. Did you know our savings rate now is over 30% as a country? And that's massive. I mean, it was never even close to that back in 08, 09. So talk about money being put away for a rainy day. And then on top of that, you got the $4.5 trillion plus sitting in money markets and bank accounts around the country. It's massive. And that at some point it's going to go somewhere. And when you have an economy such as ours, as the USA is 2/3 of, the GDP is 2/3 dependent on us buying stuff or spending money.
Well, we're a retail economy.
Correct.
I mean, we're a retail economy.
Right.
We just gave it a myocardial infarction.
And like Nino said, we're not seeing it yet. People are still hiding out, but the comfort factor is going to become more so. I mean, we're human. It's natural that we're going to want to come out of our hiding place and start to live our lives again. And I think that's a matter of months away. But yes, the confidence factor is coming back. That's why the market's reacted the way it has. But it's a long road ahead. But at least it's not the panic, fear, scared to death feeling that we had 2 months ago. And that's enough for people to start moving forward.
I mean, sort of like the Johnny Walker moment,
Yeah.
a long journey starts with the first
Right.
breath.
Exactly.
That's good. Jim, final thought.
Well, I agree with Mason. We're all optimistic in what's happening now that the economy is going to open up. But two points that give me concern. While we have dealt with crises in the past in this country, going back, we have double whammy here of the riots that have happened. And if you live in New York, that's hard to deal with. Also in New York, I've seen estimates that businesses in New York, small businesses, are going to be down by 30%, and that half of the restaurants in New York will not reopen. And those of us that know New York, you can walk the streets and see these small little restaurants that are neighborhood gyms. They're going to be gone, unfortunately. It's sad. Another unintended consequences, as Mason has mentioned, up to this point, the government has provided stimulus of $4.6 trillion, which has been done by the Treasury selling notes and bonds, and then the Fed coming along and getting into the market and help buy those bonds. So how's that debt going to get paid back? Well, it's going to only get paid back when we have a budget surplus, which is not going to happen, annual budget surplus. So we've got a political fight over raising taxes or lowering spending, and that's not going to be resolved either. So what's going to happen is that additional 4.6 million, which probably can grow, as Mason said, it's just going to get rolled over and over. So the projections were that, our people working now are not going to have to worry about it. It's going to fall on the millennials, and even some people not even in the workforce now that, 10 years down the road, they'll be in the workforce. Can get kicked down the road and they'll take care of it.
Yeah, your children and grandchildren are going to be paying for this.
Well, no, we're going to be paying for it. And the reason is that 4.6 trillion added to that, we've got to pay the interest on that, and it's going to be a huge burden. And at some point, the problems it causes, we could look like another Argentina and the country could lose the credit rating. So we're going to have to, at some point, let's face up to it, raise taxes. And so that accelerates dealing with that problem if the country is about to lose its credit rating. And that means that we who are working now, in 5 years may have to address that problem. And then the millennials, it's going to fall on them. So, and the people that are not even yet working. So that's a real problem down the road that I see, unintended consequences.
Yeah, so the mantra is we can't print enough money to get ourselves out of this. It's not going to happen. The way we get ourselves out of this is guys like all of us and Nino to open up and let the American people do what we're so good at doing Yeah. Nino, final word on that.
Well, this is a lesson of our life. But basically, I've been asked in the past, what did we learn? What did I learn? I say simple things. Don't take life for granted. Don't take things for granted. Health, economy, and everything. We will come out on that. We are confident. We know that. We are resilient. And as you said at the beginning, we are America. America will succeed because we are the best in the world, because we are resilient. So we'll come out on that.
All right, I like that one. All right, listen, before we go, we do have a question. We have a couple of things coming across right now. Question coming from the general audience. How do you think brick and mortar retail shops on Miracle Mile hold up with the move to online shopping? In other words, we shift the paradigm quite a bit. And a lot of people are, phoning in. A lot of people are using their computers, their iPads, they're buying product. So where do you think that takes us? Who wants to take that first? Who wants to go for that?
Well, I can take the question.
Okay,
I mean, again, we need the flow of people. So the thing is to start. The thing is to put the boat into the water and start to sail. So we'll come 1, 2, 3 weeks, but we move. We are on the right track. And then little by little, people comes around. So that's the right track. Opening was the key to success, to the issue. So we open. Everybody's opening up. That's it. We are in now.
Okay. Anybody else want to comment on that, on brick and mortar versus the Amazons of the world? No? Okay, let's go to the next one. Someone threw this out, which is kind of interesting, being in the catbird seat for Latin America. Do you see better opportunities for the Latin American manufacturing industry, considering the anti-China sentiment that has arisen? In other words, do we see an opportunity dealing directly south as opposed to going around the world? Jim, you want to take that one?
We've already seen it. I'm still involved with the mezzanine business in addition to Core Gables Trust, and a number of our companies have had huge issues when they were getting so many of their goods from Asia that got shut down for weeks when they didn't have that. And then others, business I know of, just being able to get product to run their business overall, not necessarily the inventory, but just supply chain needs they have. They're switching from manufacturing in China to manufacturing in the United States, Latin American countries, other Southeast Asia countries. So definitely it's going to have a huge impact. Get back to manufacture in the USA, like Sam Walton said back in '92.
He was a very interesting guy. By the way, that last question came from Alex Mayer, and I want to respect that and reflect that in our conversation. We only have about a minute and a half left, and I'm going to shoot this back to John Harris and say on behalf of the panel, myself, for Coral Gables Trust and Coral Gables Magazine, thank you. All those listening, thank you so much. We sincerely appreciate the time you took to be with us today. And we sincerely appreciated being with you and imparting some knowledge and some tidbits, things that would help you. And John, back to you.
All right, Rich, thank you so much. And thank you again for another fantastic job moderating one of our webinar panel discussions. So thank you so much. And I want to thank my colleagues, Mason Williams and Mr. Jim Davidson, for participating. And of course, thank the iconic Nino Pernetti, and I really welcome everybody to take his words to heart, which is, let's get back to normal, and let's get back out there and let's start patronizing these local businesses that are so important to our local community, and let's support them. And there's no better place for a good lunch, good dinner here in our local Coral Gables community than a Barachi. So I'll be there. Look forward to seeing everyone there. And quickly, I want to just, hopefully everyone found this insightful and helpful. Look forward to everyone joining us for the next one, which we'll announce soon enough. But I also want to just quickly mention that, Coral Gables Trust has been open throughout this period, and our doors are open now. And we also welcome anyone that would like to visit us. And certainly, we are the largest independent trust and wealth management firm with its headquarters in South Florida. we're very proud of that fact. And of course, we're headquartered here in Coral Gables. So love to hear from you as well. One last point, again, if there's any further questions, both my email address and Rich Rothman's are in the chat, and we'd love to hear from you. And feel free to reach out on anything. So look forward to hearing from everybody. And again, thank you for joining us. Have an absolutely wonderful day, week, and look forward to seeing you at some of our local businesses. Thank you.
And one last point I just might mention, this has been recorded, so if you enjoyed it, some points were made you like, you can share it with friends and family, and they can see the presentation as well. Thank you, everyone,
Absolutely.
for joining us.
Thank you, everybody.
Thank you.
Thank you.
Thank you.
Bye-bye.